Good day everyone, my name is Viet from Axis Partners and welcome to my weekly Forex Outlook. Today is Sunday, 21st of June 2015. It has been a terrific week for trading the pound. There has been strong buying powers pushing it through many key resistance levels on a number of pairs. I had 3 trades for the week, all going long on the pound, pound yen, pound USD and the pound Aussie. Let's have a look at the pound yen first of all. We are looking at the pound yen on the daily chart. From Sunday last week, I mentioned that this pair was testing the 192 level, which was acting as resistance at the time. On Monday, price broke above that and Monday's daily candle closed well above. And the pullback that I was looking for happened on Tuesday on the 4-hour chart. Here is the pullback indicated by the arrow here. It could not have been a more perfect pullback. My entry was filled at 192.20. I had a 100 pip stop and a target of 200 pips, which was hit comfortably just a day later when some positive pound news came out. This pair then continued onward, reaching almost the 196 level. Since then, there's been some pullback and prices finished for the week at 194.60. My plan for this pair going into next week, I will be watching very closely for a break above the 196 level. And what I'm looking for is a daily close above as confirmation. If that does happen, then there is potential for this pair to continue all the way up until the next weekly resistance level, which is at 204. Moving out to the weekly chart, you can see that the weekly uptrend has not slowed down at all. So until price action is telling me that a correction is happening, I will only be looking for opportunities to buy on this pair. Next is the pound USD. Daily chart from last week, the pair was sitting at 155.40 level, which was acting at resistance at the time. It closed above that on Monday, very similar to the pound yen, and again on Tuesday the pullback happened on the 4-hour chart. I've put in an arrow here to show you the pullback that I was anticipating. My long order was filled at 155.50. I only had a 65 pip stop at 154.85 and the target was 100 pips at 156.50. Now, normally I would aim for at least risk reward ratio of 2 to 1. However, due to the fact that later on in the week we have FOMC, which could cause some undesired volatility for US dollars, I decided to revise the target and close out at 1.5 times reward risk ratio instead of my usual 2. Nevertheless, it has been a profitable trade. This pair continued forward, broke through 158 resistance level, almost reached the 159.50 resistance, and now it has settled for the week at 158.75. My plan for this pair on the daily chart, I'm looking for a break of the 159.50 while also keep in mind that the 160 psychological level needs to be broken before I can comfortably say that I will be looking to enter long aiming for 162. Now onto the pound Aussie dollar on the daily chart. The strength in the pound helped push this pair above the 2.0280 resistance level, and the pullback happened late Thursday again on the 4-hour chart. This is a classic price action reversal trade. Price hitting support, we have indecision with signs that buyers are in control, and it was a very simple trade. I entered at 2.0320, had a 65 pip stop and only a single target at 2.0450 for 130 pips. This was a 2-to-1 reward risk ratio trade for me. Moving on until next week, for this pair, what I am looking for is this. If price does pull back to this 2.0280 support level again, then I will be looking for opportunities to go long again, aiming for 2.08. Now let's have a look at some of the currency pairs that I am going to be watching for next week. The first one that I want to show you is the Aussie New Zealand. From last Sunday, I mentioned that if this pair does reach the 1.1250 resistance level, then I would be looking for a price action reversal on a smaller time frame. And I did, but unfortunately no such setup form. Prices closed for the week just below resistance. Alternatively, if price does pull back to the 71.80 level, I will be looking for opportunities to enter short once again. Now let's have a look at the calendar for next week to see what sort of economic news we are expecting. On Monday all day we have the Euro Summit meeting, which is the emergency meetings that the European members must have to decide on the outcome for Greece. Tuesday, we've got more news for euros. Again, on Wednesday, there's the quarterly GDP for USD on Wednesday. Thursday, New Zealand has trade balance, and on Friday, Bank of England Governor Mark Carney speaks. But I don't think this is one of his regular events. Let's have a look. Oh no, this is just him speaking as a guest speaker on a conference. Nevertheless, just be aware that whenever central bank head figure speaks, there could be increased volatility. So take extra care if you're trading the pound on this Friday. Last but not least, for this week's video, I have created a trading account with my FX book in order to track all of the trades that I discuss in my videos. I will provide a public link to this account on my website. And you can see here, these are the 3 trades that I've taken for this week. I am also going to be adding regular contribution to this account. The idea behind this project is to show new traders that you can get very good consistent performance by only taking low risk, high reward opportunity trades. They don't come often, they don't necessarily come every day, but if you are prepared to wait patiently and only take those that will reward you more than what you would lose, you would come out on top. The second part is that regular contribution is absolutely vital in order to grow an account. When you think about it, institutions and big hedge funds do this. They have a team dedicated to only bringing new clients on board. Why do they do that? It is because they want to grow the pool of money that they want to trade. So for a retail trader to think that you can put $2,000 into an account only and grow that into 50, 100,000, that idea is just absurd. You have to follow the model that the hedge funds do it, and one way to grow an account appropriately is to have regular contributions. Think of it like your everyday savings account. My yearly goal for this account is a 10% gain at the end of the year. And as of right now, we are up almost 1.6%. So we've got 2 months gain under our belt already. No need to take unnecessary risk. In fact, I will be trading with very low risk in this account to show that it is far more important in the long term to have consistent return with very low drawdown. It is going to be a lot easier on your psychology and you are more likely to stick with it. So until next Sunday, stay safe, plan your trade, manage your risk. I'll speak to you then.